Hi there, it's Stones here. I wanted to do a little video about how I'm gonna plan on approaching my prop firm evaluation and accounts in 2026. For the context, I've always been trading my own money for the last 2 years, and in August I started prop firm. The one I use is Breakout, it's a crypto prop firm. I want to review what I've learned so far with the risk approach on prop firm, what I did wrong when I started and I realized this year, and how I'm going to approach 2026 differently. I'm not telling you to use this prop firm. I'm not telling you to do things this way. Everything I do on this channel is just a reflection of my thoughts. I'm just being fully transparent every week with my trades. What did I do? Again, not telling you to do the same. It's just my journal put out there and my own reflection. If it helps you, it's good. It does help me to put myself out there and be accountable to a lot of people. For a little bit of context, I'm just going to share here for proof. So that's my Breakout account. This is the win rate is wrong. This is I don't know why it's saying that much. It's not that much. But I had a first evaluation that I tried to go a bit fast, and I was very new in prop firm, so I tried a bit, failed this one, passed the second I paid for, got funded. Then I took 4 or 5 payouts on this one, and then went into drawdown, ended up breaching this one. While I was trading this one, I was trying to get a second 50k account. So this was a 50k account. I was trying to get a second 50k account. Because I was trading those two the same way, obviously I breached both. And now for the new year, 2026, I'm starting fresh with a 100k evaluation. It's going to be good because I'm going to be able to document the evolution of this evaluation and this account, and I plan on only having this account. So that's the withdrawal I took from that funded account. Pretty much the two evaluations, the first one were $500, so they got paid by these two payouts. I had a third evaluation while I was funded to try to get a second account. It was $500, so this got paid with this as well. And now that new account I paid for was $1,000 US. So pretty much I'm break even considering what I paid for evaluations and the payouts I took so far. The account I use on Breakout is 6% max drawdown, and it was 4% daily, but now it's down to 3%. The daily drawdown doesn't affect me because I have a rule for myself that after 2 losses in a day, I stop for the day for trading. I don't want to lose more than what I can make the next day. The max drawdown is 6%, and earlier in my trading, I think 5 or 6 losses has always been like sort of a max I had, like consecutive losses. And only until recently, October was alright, November was bad, December was bad, and I reached 10 or even 12, I think, at max break-evens and losses in a row. And that made me breach my account. It's not sustainable to only have 6% max drawdown if you risk 1% per trade. So let me explain. I did breach my account because when I was trading 1%, and I'll be at break even on the account, so at 50k. I'll take maybe 3 or 4 losses and I'll have just 2% left, and then I'll have my risk to have, instead of having 2 more losses available, I'll have 4 more losses. And the thing is, my winners came onto half risk, so it didn't have the proper effect of having the constant risk and a winner making back 2 or 3 losers. So the new approach I want to have now is I want to build a buffer to allow for more than 6 trade losing streak. I'm going to start by risking 0.5%. So that gives me straight away 12 losing streak before I breach the account, which is really good. I think the biggest issue with prop firms is that max drawdown. On a live account, you might go down to 10%, 12%, 15%. A couple trades with the same risk is going to recover those losses, and it's okay. You might want to lower your risk if you think that you're just in a bad phase you just lost the grip of the market. To protect yourself, lower your risk a little bit. But if your system is working and you have a constant enough win rate, lowering your risk will just skew the math and won't make your winners work as they should. And you're going to need, if you half your risk, once you do too much into a drawdown, you're going to need to double the amount of winners to make back all your losses. But anyway, I want to start like this. So my buffer is 12 losing trades. And once the account is up 3%, I'm happy to go back to 1% risk. That gives me 3 plus the 6. It's nine losing trades at 1%. But if the account goes back to break even, to 0, I'll go back to half risk. So that's for the evaluation. And we're going to keep trading it this way until I reach the 10% target. And the other mistake I did last year was every time I could take a payout, I was taking it because I was thinking, let's say I'm 3% in positive, and then I keep it there on the account, and then probabilities happen and I have 4 losing trades in a row. Then I'm minus 1%, and those 3% that I could have taken as cash in my money, in my wallet, in my pocket, now I don't have them anymore. So I was always thinking, just take that money when I can, take that money when I can. And because I was risking 1%, at any time I was always at 6% max, as in 6 max losing trades in a row, which was not enough. I realized I just need more in case it happens, because there's probabilities. For example, on a 40% win rate, I think your chances of getting at least one losing streak of 12 trades over 100 trades is about 17.5% on a 40% win rate. Hope that's still clear. If your win rate is 30%, for example, I think there's like a 65% chance that you will see at least 12 consecutive losses over 100 trades. So it's quite like it's gonna happen. There's a high percentage of chances that it's gonna happen at least once. So my approach with payouts now is I want to keep building that buffer and always have that buffer. Don't take money out when I'm in positive until my whole account is above 4%. And once I'm above 4%, I only take 30% of my payouts. So that allows me to just keep growing a buffer, and then I'm not worried about a streak of 6 losing trades or 12 losing trades. I'll have more than this. And once my equity is above 10%, so that account I have now is $100,000. I'm not funded yet, but this is the approach for once I'm funded, taking my payouts. Once I'm above 104K, I'll take 30% of my payouts. Once I'm above 110K, I'm going to take 50% of my payouts. My risk is always going to be 1%, and to make it simple, instead of working out the 1%, I'll just, if my account is above 110, I'll risk 1100. If it's above 120, I'll risk 1200, etc. And if I really want money because I need it, I'm happy to just take everything out above 110K. But I'll rather keep building that account, and I'm still working on the side part-time, so this money from the trading should be just complementary. So that's my approach. I know there's probably a lot of people that are going to say you shouldn't have your risk. It's going to take you twice as long, because if I need to do 10% to get funded and I'm half risk, I need 20%. But realistically, I'm only doing it for the first 3%, and then the next 7 are going to be on 1% risk. I don't want to play the prop firm game. I want to treat it as close as possible to a real account, because that's what it's going to be once it's funded. If you think you're going to be able to full port and pass those evaluation in 2 or 3 trades, you're probably going to do the same once you're funded, and it's not going to work that way. As much as you think it's not going to happen, I thought I was pretty comfortable with my 5-6 losing streak. I just seen more, and I'm 2.5 years in, and I've seen a lot of professional traders that had their worst trading lately. It does happen. You can hit 1 month, 2 months of just bad trading. If that happens when you're trying to pass evaluation and you go 2% risk per trade, you're going to lose a lot of your money on evaluations. I just want to have this evaluation. If it works throughout my evaluation, it means it's going to work really well once I'm funded. And that's all I want, and that's all I need. That's my view. Thanks for watching. If you find some value in my thoughts and what I lived before, just welcome, follow along. I'm not asking anything from you. This is just, I put myself out there. It holds me accountable. If I can help people, it's great. Makes me happy. And it keeps me busy to do these videos in the meantime. I'm having a lot of fun. So, yeah, I think it's going to be a different view than what a lot of people are saying, or I've never seen this. I've never seen anyone talking about this. Might be different, might not work. I've only been in a prop firm game for 3 or 4 months. I've learned from what I think are mistakes. I'm going to try to implement this. The numbers I took, like 30% above 4% equity, 50% above 10% equity, these are just numbers I worked out a bit with ChatGPT, a bit myself, what I think is sustainable. It's not set in stone numbers. I'm always trying to improve and progress and learn, and I'll change things if I realize it's not working. But I think it's a good structure to start with. All right, thank you. Thanks for watching. See you. All right, little bonus on the video. This is not what I'm telling you to do. This is how I approach things and what I think about those accounts. You do whatever you want, and same again, I'm not telling you to use this prop firm. There's no links or anything for you to click through. This is the only one I've ever used, and so that's the one I'm talking about. So in the evaluation types, you have the 1-step and the 2-step. The main difference here is that the 1-step doesn't have a trailing drawdown. So if your drawdown on a 100K account is 6%, whatever profit you make or how high your account is going, your maximum drawdown is always going to be $94,000. So this from the start eliminates that 2-step straight away, because all the 2 steps are trailing drawdown, meaning your maximum drawdown. Here, these are bigger numbers, which is what we want. We want big drawdown, but this is from your high watermark, and I think it is just not good because you cannot build a buffer. At any time, you're always going to have 8% or 5%, and you're going to have to play with this. If 8% is not enough, you're going to have to play 0.5% risk to be able to allow for a 16 losing streak, for example. But see how this is cheaper than the 1-step? It's a little bit like everything in life. Most of the time, the most expensive thing is the best. It's not always true, but most of the time it is. And that 1-step classic is the most expensive of all the accounts. As I said, I think the biggest issue is your maximum drawdown and how many losing trades do you allow yourself to have in a row. So that's why you want the bigger drawdown. Here on the classic, it's 6 and 3 daily. The Pro goes down to 5 and 3 daily, and the Turbo goes down to 3% daily. So it's just not good, in my opinion, to either take Turbo or Pro. Your daily drawdown doesn't change, max drawdown doesn't change, but the maximum does. And so you want the highest, which is the classic, and the 1-step, which is not trailed. This is how I see things. For me, 1-step classic is the best account to take, and obviously it's going to be the most expensive one.